and welcome to the EisnerAmper Engaging Alternatives podcast series. I'm your host, Elana Margulies-Snyderman, and with me today is Tibor Wilheim, CEO of Mount Wilson Capital, a direct lender specializing in fix and flip and residential bridge loans across the Mid-Atlantic, Midwest, and Northeast regions. Today, Tibor will share his outlook for investing in this space, including the greatest opportunities, challenges, and more. Before we dive into the conversation with Tibor, don't forget to hit that like button and subscribe to EisnerAmper wherever you listen to your podcasts. And you can also find us on YouTube at EisnerAmper. Hi, Tibor. Thank you so much for being with me today.
Thanks for having me, Elana.
Absolutely, Tibor. So to kick off the conversation, tell us a little about yourself and how you got to where you are today.
So my name is Tibor Wilheim, and I started Mount Wilson Capital. We're a direct bridge lender to fix and flip properties. I was getting my MBA from Johns Hopkins, simultaneously also getting my rabbinics degree from Ner Israel Rabbinical College. And someone approached me at synagogue. They were working on a fix and flip property and they needed a loan. And I recently got married and had some savings and some wedding money. And I made the loan to that individual. And thank God, not knowing anything, it was a successful deal. I did it a couple more times. I funded him a couple more times for a couple more projects. And I realized there's this opportunity set in the space where you have a lot of these real estate investors who have good credit, experience, and liquidity, but don't want to go through all the red tape of a local traditional bank process for these deals that pay off many times in under 6 months. So I brought the idea up to my father, who also is an entrepreneur. My family has a large healthcare company. I wanted to kind of pave my own path. And he seeded me on this endeavor. And thank God it's been very successful. And to date, we've done over 1,200 loans and $250 million of loan volume. And we love the opportunity and we love the marketplace.
At EisnerAmper, we are creative problem solvers that take a 360-degree approach focusing on you. We're an award-winning firm with decades of experience providing accounting and advisory services. EisnerAmper, let's get you ready.
Well, congrats on your journey, Tibor. That segues into the following question I have for you. Given your focus on direct lending via fix and flip and residential bridge loans in the regions I mentioned earlier, I would love to hear your high-level outlook for the space.
So we mostly focus on workforce housing. So our average loan and exit on these deals is anywhere from $200,000 to $500,000. According to Redfin, there's a shortage of between 2 and 4 million homes in America in this space, affordable housing. And so we love the fact that we're bringing value to the community by fixing and flipping these homes. We love the predictability of the asset class. A home is a home. You could work from home, you could shop online, but you can't live in your office. We think that with AI and all the technology out there, people living in homes are not going to go anywhere. So lending money on the single family space 1 to 4 units is a great opportunity for good risk-adjusted returns in private credit, which we all know is a very, very hot sector.
And Tibor, more specifically, what are some of the greatest opportunities you see in your space and why?
We like the Midwest, Ohio, Kentucky, Indiana. We also lend a lot of money in Maryland and Pennsylvania. And what we like about this space is after COVID, there was a lot of influx of building in the Sun Belt, like places like Nashville, Tennessee, and the Carolinas, and also in Texas, and Austin, and San Antonio. But these places are still very underdeveloped, and the cost of building a new home between financing, labor, and construction is very expensive. So any existing home that needs to be fixed up and could be flipped to a homeowner, there's a lot of value. So our ability to provide capital to these investors to fix up these homes from the 1950s, 60s, 70s that are in a dilapidated state is a great way for them to make a great income as the investors and for us to provide valuable credit and great risk-adjusted returns.
Tibor, on the other hand, what are some of the greatest challenges you face in your space and why?
So some of the greatest challenges we face in this space is because it's so attractive and because the returns are so great, a lot of institutional capital, a lot of white powder has poured into our space, which has brought our ability to charge higher rates down. So there's been over $20 billion of securitizations in our space since 2015. And there's some large companies out there that are flooding the markets and trying to be as competitive as possible to win business. Now, we always feel like there's a great opportunity because we're a balance sheet lender. We're not selling our loans. We're holding all our loans, and we're very relationship-based. So we make a lot of local events in our markets. We have local originators. So people that need reliability, they don't want to just go online and try to find a loan for their fix and flip. They want someone that they could call. They want someone that could close quickly, that they know will close. A lot of these deals have short timelines, so they need to close very quickly. So we still think we have a great opportunity in our space. And the opportunity set is great, and we love the asset class. At the same time, there is a lot of capital that's pouring into this specific space.
Tibor, we've covered a lot of ground today and wanted to see if there are any final thoughts you would like to share with us.
We really like our space in regards to, for two reasons. Besides for the fact that we could provide great risk-adjusted returns for our investors on a very predictable asset class. A home will always be a home. We know how to go in there and fix it up. If it needs to be fixed, then we have to take over the asset. We also like the fact that as a mission to help the local communities. So we've seen from time and time again that our financing allows these local investors, one, to make a great living. A lot of these investors are, they're backed by themselves. They use their own capital. They're independent sponsors. They're not syndicates. They don't have a lot of capital behind them besides for their own money. So they're putting a lot of their sweat equity into these deals, and it allows them to live the American dream and provide for their families and make a lot of money. And then secondly, it helps the communities. A lot of these homes are eyesores in the communities, and a lot of these homes that are not being fixed up are places of people gather for crime and other things. So by us giving the money to these investors to fix up these homes in the community, it provides a greater value.
Tibor, I want to thank you so much for sharing your perspective with our listeners.
Thank you so much, Elana, for having us, and we really appreciate the opportunity to come here.
And thank you for listening to the EisnerAmper podcast series. Visit EisnerAmper.com for more information on this and a host of other topics. And join us for our next EisnerAmper podcast when we get down to business.